Coldwell Banker. So today, this is our first live stream, and I'm sure you can tell. So bear with us. We're going to get a whole lot better. But we wanted to come at 6 o'clock on Sunday night in California. It used to be sunny California. It's been raining. But it was interesting. I'm getting a lot of the same questions from people. And I wanted to hop on and address those. And it has to do with the market. So I'm an old stockbroker. Many years ago, I owned a stock brokerage firm in Los Angeles. I was the, we call them Series 24. I was the general securities principal, stocks, bonds. We did options, some currency options, made market and stocks, all kinds of things, NASDAQ stocks. But none of this is legal financial advice. I'm a real estate agent now. But I want to talk about the macro and the micro. So right now what we're seeing is the stock market was down 1,100 points last week, and this week it's probably not going to get a whole lot better. The bond market, we still have an inverted yield curve, which means the short-term bonds, the treasuries, are going to yield more than the long-term bonds. So you have bills, notes, and bonds. So what we're seeing, and so if you're a stock market investor, you're a bond investor, it's a tough place to be. Gentleman today I was talking with at church, doing short terms, so doing 3 and 6 months. They're called laddered. So put some money in, matures in 3 months, other matures in 6 months. Not unusual, especially in the bond portfolio. You have a lot of laddered portfolios, and that means that they mature at different points. The reason I mention that is people are looking for a place to put money. Now, if you put it in the bank, of course, you're still not getting the type of return that most of us need. But right now, so what we're doing right now is not only are we looking at real estate as an owner occupant, but also for investing. Now, the reason I mention that, and I'm going to jump around a little. In California, they're incentivizing owners to build an accessory dwelling unit, which is a granny flat, or think of it as an in-law. I'm not sure people are going to put their dogs or the kids. It's can be a separate building, accessory dwelling unit. It can be a junior accessory dwelling unit, which is attached. And we're starting to see a lot of people do that. What they want to do is they want to generate income. It's called house hacking. But not everybody needs to do that. So there's other reasons that one could build an ADU or a junior ADU. But from an investment standpoint right now, what we're seeing, yes, real estate is high. But what we're seeing is we're starting to have a lot of people talk to us about, hey, what can I do? I have a nice size lot. I can build something. I have a big garage. Can I convert it? So we're starting to see a lot of that. From an investment perspective, adding accessory dwelling unit to an existing home can generate a nice stream of income stream. Certainly, probably over and above what you could get right now in a bond. Stock market, again, that's a tough place to be right now. Price earnings ratio is 18.8. Back in 2008, when we had the crash, it was 18. So 18 times earnings. So again, we're inverted yield curve, and again, I'm giving you kind of a high level. And if I want to relate it to real estate, price earnings ratio stocks means they're more expensive, certainly based on earnings. But the yield curve is inverted. It's backwards. Traditionally, the longer you put money in, the higher return. Think of a CD. If you do a 5-year CD certificate of deposit, you expect more than on, let's say, a 1-year. But that's not the way we're seeing it. Again, and so that's why they called it inverted yield curve. Coming back to real estate, what we're seeing is we're starting to see a lot of really good capitalization rate deals. You have gross rent multiples, you have net operating incomes, all kinds of numbers, internal rate of return that we look at. But from a cap rate perspective, a gross rent multiple, I think, is even more important. We're starting to see some really good deals. Now, in some cities here in California, they have city-based maximum rent increases, so rent caps. California has a rent cap. So before investing, certainly familiarize yourself, speak with your real estate agent. Actually, we always hope it's us. But make certain that you know what your rent cap is, because that has a lot to do with what you can do in the future as far as if you need to raise rent.
We got a comment. Someone's looking to buy rental property.
Okay, fantastic. So looking to buy rental property, first question would be, Do you have a specific location? What's your what price range? How many units? For some, we see single family homes, again, adding an accessory dwelling unit. Others, it could be a duplex, could be a threeplex, triplex, fourplex. Anything above a fourplex becomes commercial. Commercial real estate for many is easier because you can, the loan is based on the property providing the necessary loan coverage. So, but the question I would first ask is there a specific location? Have you owned investment property before? What's your objective? Are you for some it's they want to start building a portfolio of income properties. For others, it could be that they're looking to flip, and so we're working with people on all different levels. Um, some people here's what one of our clients is looking at doing. They're going to buy a fourplex, and they're going to take the income from that and put it into an UGMA or a trust for the kids. They have multiple kids. They're going to be going to college. And so the income stream from the income property is going to go there after debt service. So they want to pay off the bills. But that's neat because the parents can own, the kids get benefit of the revenue, and then in the future, let's say in this case 13 years from now, when the kids are ready, they're going to sell the building and use that money then to pay for college. Now, what some other of our clients are doing is they're buying a condo or townhouse or even a single family home near the college that their kids are going to. And so they're going to house hack. The parents buy the property, heck with YouTube. Maybe it's a YouTuber. So many of these kids make a lot of money. But what they do is they buy the property and then they can rent, let's say buy a 3-bedroom and they only need 1 bedroom. They can rent the other 2 bedrooms out. It's what we call house hacking. So they'll use the income from that to support themselves. And that way the parents don't have to get, of course, money for rental, for the leasing, but they're using it for ownership. And it really is good, a good way to build a portfolio. But again, so there's lots of different ways to do this. But if you're looking to invest, first thing I would do again is look at location. As far as financing, there's a wide range of financing. We deal with probably 50 different lenders, and some are better at financing income properties than others. You also have the ability to have FHA financing. Now, in this area, they can go up to $2 million for a fourplex. So if someone wanted to do FHA financing, but you also buy a home with VA. So it really is an excellent opportunity if you're a veteran. I'm a USMC veteran, simplified jarheads, double dogs. If you're a veteran, you can use your VA entitlement to buy an income property. Now, you can't. There's a lot that goes into that, so certainly reach out to us. We have some phenomenal lenders that can assist you with that. So you have FHA financing, you have VA financing, you have traditional financing. There's all kinds of different ways to quote unquote play this, but it really depends on you. What are you looking to do? What's your risk tolerance? What amount? For some, again, we see them wanting short-term rentals at the beach. Others say, hey, I want something that I can rent up at, and I want to go up to the snow every once in a while, so I'll buy something up there. And others say, I want something 2 miles from my office. I want to be able to touch it. I want to be able to go over, and I want to maintain it. So again, there's all kinds of different options. Again, keep in mind, 1, 2, 3, 4 units is traditional financing. 5 and above is commercial. Totally different Megillah, as my Yiddish friends would say. Totally different ball game. I would also take a look at the tax ramifications and consequences. Speak with your financial advisor. And again, I speak that language. Certified financial planner, if you have, of course, a CPA, reach out to them and say, how can I structure this to benefit me and my family? Take a look. Is an LLC going to benefit you? Should you buy through an S Corp? Again, very There's a lot of things that go into this. It's not just, hey, I want to buy a fourplex, find me something, and off we go. So, again, we'd love to help you, and we've dealt with people in all kinds of different counties here. We've sold in San Bernardino County, Riverside County, Los Angeles County, San Diego County, and Orange County. So we know the areas well, and we're willing to travel. And certainly, do us a favor though, subscribe to our channel, reach out to us, DM us, and we'd love to connect with you. And you can call us, email us, set up a Zoom call, and we'll be a lot more specific once we have more specific information about what you're looking to achieve. But again, what we're seeing a lot of really good investment opportunities in real estate right now. I know people say, well, the market's going to crash, and it's a hell in a handbasket, so to speak, with the economy. But the truth is that real estate, if you take a 10-year snapshot of any period in real estate, you've made money. I went through 2006 to 8. I've been licensed 17 years, so I've seen it. I went through the crash of the stock market back in the 80s and 90s. We did all kinds of things. But my point is this: is that real estate's something tangible. You can touch it. They're not going to move it. It's not ephemeral in a sense. It's there. So you're not buying for today. You're buying for 10 years from now. That's the thing about it. And a lot of people say, well, I think it's going to go down. It very well could. But if you buy right, you buy in a good area, and you've got good tenants, for example, if you're looking for an income property, you're probably going to do extremely well. The majority of wealth in this country has been created through real estate. I'm not saying put all your money in real estate. Stocks, bonds, mutual funds, ETFs. I mean, you got all kinds of things you can do. But certainly real estate, not just as an owner-occupant, but real estate as an investment vehicle still makes sense. Even at these rates, there's a lot of benefits. There's a lot of tax benefits. There's a lot of different ways to structure a portfolio. I love working with accountants, financial advisors, and whether CFPs, even CFAs. You know what a CFA is, Chartered Financial Analyst. Again, we work with these people. What we want to do is be part of your team as you build your assets and all. So work a little differently, whatever's best for you. So my wife reminds me. So whether you're looking to make a move, do something in the next 5 days, 50 days, or further out, give us a call, shoot us a text, send us an email. We'd love to help you make a smooth move to really all surrounding communities and counties here in Orange County. Appreciate you watching. Again, reach out to us.